Good morning, Big Square Road.com with your morning horn of Z's, your sip of coffee. We are in game mode. It is very clear that Europe's about to go sideways. And when Europe goes sideways, the banking derivative bubble is popped, Deutsche Bank goes down, JP Morgan, Citibank, and then everything goes down. You should have your assets in your own possession absolutely right now. I don't give a shit what the price of those assets are. It's not going to matter after the system blows away. Um, and that is the plan. That was always the plan. Destroy the unbacked fiat monetary system. That's what Ruda wrote in the sand in the original Federal Reserve Bank comic books back in 1981. It's an economic formula called On the Road to the Golden Age. It says the best way to get back to a gold standard from an unbacked system is to print as much money as possible, building the derivatives and the the stocks and bonds, everything. Blow it to the roof and then blow it up. And you'll have to go back onto a gold standard. Now, this was written in 1981 and then rewritten in 2007. That was still the plan. They tried to do it in 2008 and it wasn't big enough, hence the saving of the banks, and now we have the cryptos. And the cryptos will be most likely, there's a small chance that the cryptos won't be the answer, very small chance, but in that case, gold and silver will be the answer. So you gotta have your gold and silver as well as your cryptos. But more than likely, it'll be a combination of all kinds of things. But the key is there's going to be no deciders. The people who are running our monetary system have absolutely destroyed anything, any semblance of control. It is over. It is absolutely over. And Trump, all he's doing now is pulling the final plug. Trump's tariffs in retaliation for jailed American pastors sends Turkey's economy plunging. Who cares about Turkey? Well, European banks care about Turkey, and they are on the brink of collapse already. Obviously, people living in Turkey care about Turkey. But all these banks are interconnected. Turkey goes, good night, JP Morgan, good night, Citibank, good night, Deutsche Bank, obviously. So let's see what's going on and see if we are heading into that time when you're going to pray that you have physical assets in your own possession, as in physical cryptocurrencies, physical silver, and physical gold. Mainly silver, mainly cryptocurrencies, my favorite. I have actually, if you go to road2road.com, I'm still, the cryptos I have projected long ago, my favorite 15 are still my favorite 15. Then again, I'm a hodler, so I don't trade back and forth. But all of them are just doing, they're not doing fine financially, the price wise, but price means nothing. They're building out their product. They will be the 15 best, in my opinion. If you go to roadrooter.com, under the private road section, you can find it right there. And there's Ruda. That's what Ruda comes from. It's a Fortran term. But I go through my 15 picks, and they're absolutely, yes, I know the cryptos are in the dumper. But it was always the plan to destroy everything and then rebuild. And the reason to own cryptos, the reason to own gold, the reason to own silver is the rebuilding part. And you're going to pray that you had your hands on your cryptos. Because if the banks go down, there's no exchanges will be open. Coinbase will not be open. GDAX will not be open. Crack will not be open. They will be destroyed along with the unbacked fiat monetary system and the bankers. And you're going to just pray that you have your stuff in your own possession. So do that now. I know I harp on it almost daily, but it's so important now, especially as what's going on with Turkey is going to trigger some much bigger things, and I'll show you. Fierce tensions between the United States and Turkey have continued to escalate over the weekend, resounding through the global economy, inseminating volatility throughout the Middle East markets. In response to Trump's tough crackdown on the once esteemed NATO ally, this is Trump. A tweet on Friday. I've just authorized a doubling of tariffs on steel and aluminum with respect to Turkey, as their currency, the Turkish lira, slides rapidly downward against our very strong dollar. Aluminum will now be 20% and steel 50%, Trump tweeted Friday. Our relations with Turkey are not good at this time. He is obviously trying to destroy the Turkish lira, which will destroy Turkey, Turkey can't, if you have a weak lira, Turkey can't pay back any of their foreign debts. Their debts based in other people's currency, which are huge, and I'll get to that in a second. This is absolutely economic warfare. But the funny thing about this is Trump's actually talking about it. Usually they just do it behind the scenes. They click a mouse and destroy people's currencies. But Trump's talking about it. It's an open warfare. Turkish lira tumbled from 4.7 to the dollar to a depleted 6.4 to the dollar for the first time in history, breaking the 6 mark. The lira is reported to have more than 30% of its value lost, of its value throughout August, with the biggest hit, a fall of 14% happening Friday. The yield on Turkish decade-long bonds have risen over 20%, and inflation is now running at 15% compared to 11% a year ago. Now remember, for every dollar in Turkish debt, there's probably $100 in derivatives backing it up, and the largest holder of derivatives is our friends over at Deutsche Bank. I'm sure Deutsche Bank thinks that they've hedged their derivatives with other derivatives, but that's when you get into the problem. Everybody thinks they're hedged, and all it takes is one weak bank who is taking on these hedges, because with derivatives, you get paid up front. So you recognize income up front. That's what Deutsche Bank has been doing for so long, but now you got to pay it back. Especially if Turkey goes down, and it is looking like they are going to go down very, very soon, as in probably just shut their markets to the West. So we will see. The crux of the diplomatic dispute is Turkey's refusal to release Pastor Andrew Brunson, that's not the crux, that's just an excuse, who has been detained in Turkey for 21 months on terrorism charges. So they're saying, oh, that's the real reason, and yet Trump is doing this at the exact weakest time of the European banks. This is all by plan, my friends. It's crazy what we're living through. All right, so let's see what the headlines are. Deutsche Bank among German firms hit by deepening Turkey row. Row. Is it row or row? That one's blocked off. Next one, Barron's. Morning movers, Deutsche Bank slides on Turkey concerns. Why Deutsche Bank? Deutsche Bank isn't even the largest country or bank that is exposed to Turkey as far as loans, but they are as far as derivatives. That's the key. And it's right here. Here's really interesting. The Guardian, over a UK paper, is running a live update. That's how big this is. Turkish lira crisis. Erdogan says attacks will continue against the economy. Live updates. All the day's economic and financial news as Turkey's lira crisis hits shares and currencies around the globe. So look at on the left side. They have it. They literally, it's like a sports game. They're ticking off every hour what's happening. 2 hours ago, Erdogan, we must prepare for more attacks. 4 hours ago, Turkey blames fake news for financial crisis. 5 hours ago, European banks shares hit by contagion worries. 4 hours ago, a bad day for emerging currencies. 6 hours ago, European stock markets opens in the red. 6 hours ago, Turkish central banks announces new measures. It is insane. It is so important. If it gets worse and worse, you're going to see write-offs having to happen. And then it's going to trigger derivatives. And how long do derivatives take to pay off? A month. So right now we're the middle of August, so it's going to be the middle of September, right in that sweet spot when we're thinking the whole system's going to go sideways, or at least begin. I think it's already begun. But yeah, there's no green shoots in the horizon, my friends. And check this out. ECB is concerned by banks' exposures. Look at how it's interesting, because in 2011, Turkey really got into the derivative market. That's when everybody dove in there and started lending. So Spain, France, and Italy are massively exposed to debt, the Turkey debt. Spain, it looks like the biggest amount, 80 billion euro. Very interesting. Investors dump European banks exposed to Turkey. See, here's what the other problem is, like Deutsche Bank is linked to all the European banks. So if they're in any trouble, and what are they doing? What are these banks are doing? They're investing in the higher yield, riskier bonds of Turkey, and they're getting screwed now because that risk is coming to bear. Investors dumped European banks. The sell-off came on news that the ECB was examining the exposure of several of the region's banks. European bank shares fell Friday as investors scoured markets for exposure to Turkey, where a sharp fall in the lira was raising concerns about Turkish leaders' ability to repay their foreign debts. Sell-offs came on news the European Central Bank was examining the exposure of several of the region's banks to the unfolding situation in Turkey. Although the ECB's banking watchdog concern isn't too high at present, the sudden falls in bank stocks underscore the potential contagion. So let's talk about Turkey. There's a really good article that came out last week from the Wall Street Journal on what the problem is in Turkey. Turkey on the economic brink, explained in a dozen charts. A strong dollar, high inflation, and President Erdogan's unorthodox economic policies have spooked investors in the strategic emerging market. Investors fear Turkey is teetering on the edge of financial crisis following a dramatic plunge in its currency that has gathered pace this week. The lira is down now 40% on the year, and the bond yields have skyrocketed. U.S. sanctions against top Turkish government officials and unorthodox economic policies by Turkey's president have spooked markets. A strengthening dollar and higher U.S. interest rates are making life difficult for the weakest emerging markets. Turkey is prime among them. Here are a dozen charts showing Turkey's vulnerabilities, including its mountain of foreign currency debt. That's the killer, especially when you have a diving currency. Our yawning current account deficit and rising borrowing costs. There's the chart of the lira. That's a click of a mouse. See that little bottom part right there? That's a click of a mouse by Steve Mnuchin. Right when President Trump said, "Oh, they suck, sell the lira and buy dollars." Lira, the main barometer of investor sentiment towards Turkey, has fallen 12 straight trading days against the dollar, its longest streak since November 1999, the month before it took an IMF bailout. The biggest losers. The lira's economy declined during the past years, one of the worst over the past decade of any group of 20 economies, including during the 2008 to 2009 financial crisis. Yeah, it's right up. Look at that. That's the second largest drop ever back to the Russian ruble. That's crazy. Inflation nation, the falling currency has made imports more expensive, stroking inflation. See, that's the problem is that the people bear the brunt of these criminal banksters and criminal politicians. Soaring bond yields. As a measure of bond yields, borrowing costs have skyrocketed as investors demand a higher interest rate in order to compensate for the high inflation and plunging currency. Exactly. Once you get in this death spiral, there's no way getting out of it. There's nothing they can do. It's going to take a gigantic bailout, but truthfully, that won't even do it either. It's a click of a mouse at the basement of the Treasury can do this stuff. Now, here's the interesting part. Seeking protection. Investors are worried Turkish borrowers won't be able to pay back their debt. The cost of derivatives used to insure against Turkish government debt have risen sharply this year. Only Turkey is more expensive, it looks like. But look at that. And who's writing these derivatives? Our friends over at Deutsche Bank. Vulnerable current account. A key weakness of Turkey's financial system is a high current account deficit, meaning it needs to attract foreign inflows of money to keep the economy humming. The IMF forecasts that Turkey's current account deficit will be the widest among emerging economies in the G20. So, yeah, they're the worst of the worst, and so it's a real weak point in Europe, absolutely, and in the Middle East, and Trump is absolutely poking the weakest part because he knows that when Turkey goes, so goes all the big banks. Because it's time, my friends. Mounds of foreign debt. Look at all that foreign debt. A measure of Turkey's reliance on money from abroad is the high percentage of foreign currency denominated debt owed by companies and government households. So imagine you're a bank and you took out debt in a foreign currency and the lira is just diving. You're basically, and it's gone down 40%. You have to basically pay 40% more than what you were paying before because you're paying off in a foreign currency. And already you had to take out debt anyway because you were so weak. That's where all the defaults come in. Hard to pay. The external debt becomes more expensive to repay as the lira slides. A major issue for companies and households that have borrowed in foreign currency. Absolutely. And there it is. And since 2010, it's increased 20%, which is a lot. Bad loans. Difficulties paying back loans are already showing up following a surge in credit growth last year that was fueled by large government guaranteed lending programs. Where have we heard that before? I mean, it's basically the Venezuela model. And here all these banks' bad loans are just off the charts in some of these. Oil hurts. Turkey has been heavily reliant on imported oil. That's a major problem since oil priced in dollars has been on the rise this year, even as the lira has weakened. Fuel needs. Turkey's consumption of diesel fuel has gone through the roof. FX reserve shrinking. So they're burning through their foreign exchange reserve. I heard they did I think it was a $10 billion operation today. So they were at like 78, around 78 billion. So now they're at 68 billion. This thing is dropping fast. And there's no, any attempts to save the lira will be met with a click of a mouse in the basement of the U.S. Treasury. So that won't work. So that's the insanity. That's what's going on. And yeah, it's all being done on purpose. This is the end game. And in the end game, it's going to be really ugly because the exchanges are going to shut down. You're not going to know the value of things anymore. That was always the plan. Destroy the old system by blowing the bubbles so high that you can't get out of it. And Deutsche Bank is the number one holder of derivatives on the banking side, 50 trillion. Now, I don't think they're the number one holder overall. I think the Exchange Stabilization Fund, which is the secret fund within the U.S., holds hundreds of trillions. But that's how they can do it. With the click of a mouse, they can destroy countries. They can destroy currency trading systems. They can do anything they want. The little man behind it's so reminiscent of the Wizard of Oz. The little man behind the curtain pulling the levers and all that. So where are we? We're on the brink. We're on the brink of keep an eye on Europe. When the defaults start happening, that's when people cash in their credit default swaps. That's when the exposure that Deutsche Bank has will really shine. And it's not just Deutsche Bank. Most likely we'll see banks fail in Spain, Italy, Turkey, obviously, and then that'll roll up to Deutsche Bank. And then those people who are hedging their position with derivatives will go to Deutsche Bank to try to cash them in, just like 2008, and then the system falls apart. In the United States, it's going to take maybe a week or two before it hits here. And then they're going to go to Congress again. And last time it was, I think, 700 billion. They asked for a bailout. This is going to be 20 to 40 trillion. And do you think with the sentiment of people to their government and people to banks in the United States that any bailout will be done? No. More than likely, we're going to say, screw that. And then there's no debt. Yes, all your assets will be gone too, but then there's no debt. Yes, this is extreme, but it is an extreme point in time that we're living in right now. So, whatever happened in the past, 100 since 1913, that's got to be washed away, and it's a good thing. Ultimately, it will be a good thing. Yes, people will die, people will lose their life savings. The people who will be hurt most are probably those who bought into the old system, have their 401ks in Charles Schwab or Fidelity. If you still have your retirement accounts in those types of organizations, call Will Lair at Perpetual Assets and see if you can do a self-directed IRA. Get your assets in your own possession, and you don't have to pay any kind of fees or penalties if you're rolling it over into your self-directed IRA. And you can buy cryptos, you can buy silver, you can buy stocks if you want. I wouldn't, but you could. But the key is to get it out of the hands of those companies that are going to be gone when the banking system's gone. I'm not so sure there's all that much time left. It takes about a month to get your money out. But call Will at perpetualassets.com, and he will help you out. All right. That's it. That's all I got for you. I'll keep an eye on this situation. You should keep an eye on Europe. And I don't see either side backing down. Erdogan can't back down, and Trump obviously isn't going to back down. So, yeah, good luck with this. But this is the end game. This is how the end game really kicks into high gear. So September, October, just buckle down. Good luck, my friends. BixWeir, roadtoroad.com. Talk to you later.